What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is Euro JPY. Now, why do I want to speak about Euro JPY? Because this pair has very good potential for some nice trading opportunities. So obviously I want to share with you guys a full breakdown of this market to show you where and how we can be looking for the next potential opportunities. Now, as usual, I will be keeping the analysis as educational as possible. So first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And we will be checking both the JPY and obviously the Euro to see how hedge funds, so the biggest speculators in the market, are shifting their positioning in time. And then by using the combination of our technical analysis and our order flow analysis, we will be able to understand where we can be looking for the highest probabilities opportunities on the pair. Starting here from the monthly time frame, what do we have? Now here on the monthly, what we can see is that the market has just provided this overextended W formation. Now, generally speaking, after an overextended W formation, what you expect is for the market to complete the pattern at the neckline and then reject the neckline to the upside, because the neckline itself, by definition, is a strong area of previous resistance, now turn support. And we can see how that is exactly what the market did. After creating a W formation, the market went for the completion of the neckline at the previous resistance turn support and then created the rejection to the upside. Now, as I have already said, the neckline by definition is a strong area of support because it is the previous resistance that, after the market breaks it to the upside, is turned support. However, in this case, inside of here, we actually had confluence of support because we didn't only have this structure support, but we also had the 0.382 of the Fibonacci taken on this impulse leg, because keep in mind that if you have an impulse and you want to measure the retracement, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, in this case, we can see how the market here retraced exactly to the 0.32 of the Fibonacci taken on this monthly impulse. So at the moment, everything is clear here on the monthly. The market tested this confluence of support and is currently still rejecting the area to the upside. However, in rejecting the area to the upside, the market also created a new structure because the market broke above this previous high. Now, this previous high, by definition, is a strong area of previous resistance, which, now that the market has broken into the upside, is turned support. So we can expect the market to go for a retest of the previous resistance turn support and possibly reject the area to the upside. So here in the monthly as well, the situation is quite clear. We have a nice potential retest of support before the continuation to the upside can continue. Now, why do we expect a retracement anyway? Because by definition, a market that is uptrending creates a series of impulses and corrections, meaning that after this impulse, what we expect is for the market to provide a correction before the continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just provided this candle here. Now, when you see a candle like this with a green body and a very long wick, what you expect is for the next candle to fill in this wick and potentially create a continuation to the upside, which we can see that is exactly what the market is currently doing, filling in the previous monthly, actually in this case, weekly wick. So on the weekly time frame, we can actually expect more continuation to the upside. Going down on the daily, what do we see now? Here on the daily, I had spoken about Euro JPY quite a few times in the past. I spoke about Euro JPY after this overextended W formation. When the market was here, I made a full breakdown explaining all the reasons for which, from here, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. Then we had the creation of this overextended W formation. And actually from here, I had created a full breakdown explaining all the reasons for which we expected the market to create this move to the upside, and in fact, that is exactly what the market did. And as I was saying, after the creation of this overextended W formation from here, I made another breakdown explaining all the reasons for which, from here, we expected the market to provide this move to the downside. And in fact, that is exactly what the market did. And from here, I made another breakdown explaining why we wanted to see the continuation to the upside, which, by the way, is exactly what the market is currently doing. And I will link all this previous analysis in the description. So you find all this previous analysis linked in the description, so you can go and check it out for further reference and more free education. Any questions or requests for the next videos, make sure that you leave them down in the comment section below. Also, make sure that you smash that like button and subscribe. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see how on the euro, with the last report, hedge funds have been decreasing their net positions. We went from having 138k net positions all the way down to having 125k net positions, with 6.5k shorts added with the last report and 5.8k longs getting closed, reaching 96k shorts and 222k longs. Now, if we look at the shorts, we can see how we have been increasing and increasing and increasing. We went from having 72k, slowly increasing all the way up to 96k short positions. However, the longs with the last report have been decreased from 228k to 222k, with the 5k longs getting closed as we have already identified. So the euro is starting to get a little bit weak. And if we go and see what we have on the JPY, we can see how actually the JPY has been getting weak as well. In fact, net positions just dropped from 28k to 19k, with 3.9k shorts getting added and 5.4k longs getting closed, with a massive 41k shorts, so a huge increase of the short positions from 13k to 41k. So the JPY has been even weaker than the euro, and that is why euro JPY has been uptrending, because the JPY is even weaker than the euro, while euro USD is obviously continuing to the downside. So this brings to the current situation that we're seeing in the market, Euro JPY trending to the upside. But if we look at the structure and price action that the market currently has here, it's quite easy to understand that in this case, no matter if the market from here will create a move to the upside or to the downside, in both cases, we have some quite interesting opportunities. In fact, if from here we will see the market create a nice move to the upside, what we will have is the creation of a W formation, specifically an overextended W formation. At the same time, if from here the market will actually create a move to the downside, in that case, what we will have is the creation of an M pattern, potentially even an overextended M pattern. Now, generally speaking, after a W formation, as we have seen at the beginning of the video, you expect the market to create a move to the downside and complete the pattern at the neckline. After the creation of an M pattern, you expect the market to create a move to the upside and complete the pattern at the neckline, so the previous support, turn resistance. So how we can be looking for a potential opportunity here on Euro JPY. Now, as usual, the job is to be reactive and not predictive. So the monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So if the market from here will create a move to the upside, what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a bullish market as we have right now to a bearish market. And as soon as the market will shift from a bullish to a bearish market, at that point, we will be adding Euro JPY to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and completion at the neckline, which is the previous resistance, now turn support. In the other case, if the market from here will create a move to the downside, we will have the creation of an M pattern. After an M pattern, what you expect is for the market to create a move to the upside. So in that case, what we will be doing with students is monitoring price action from a 4-hour perspective during the move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market, as we will have, to a 4-hour bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding Euro JPY to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete the pattern at the previous support, turned resistance from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day, I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering all your questions every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.